Hi guys, good evening. Welcome to today's price action analysis video. This is the price action analysis of the 7th of November 2022 and this is the Monday. So we had basically had a gap for 2 days. So we did not have sessions on Saturday and Sunday, and now try to understand the psychology of option sellers here. Okay, so I will discuss a few important points with you today here, and I will try to make you understand where the sellers are, where the buyers are, and where you can trap these sellers and buyers. So see what happens here is, if you take a look at the previous day, now let me tell you that the previous day is of utmost importance. Okay, if there is anything of utmost importance even before the market begins, it is the previous day. So you have to understand what the previous day, what price has done on the previous day. So now let's see what the previous day was like. So if you see here on the previous day, we had this particular level here in which price had traded for the most part. Okay, and after this level was broken, we saw that there had been a good rally to the upside, which actually went ahead of the, or above the, it went ahead of the, or rather I should say above this particular candle's high, which was the opening candle's high, but the opening candle was anyway a green candle. But then we actually saw that the range was broken and we saw this particular strong green candle here, right? Now if you see from if you go to the next day, we know that there was a gap here. Now the gap was how much? About 90 points, 92 points from here to here. That was from the closing to opening. Now I always keep telling you that whenever the day high and the previous day close are close by, that level becomes very important. The previous day high, I mean, becomes very important, because the previous day high and the previous day close are almost at the same level. So they tend to act as support when price, or as a strong support rather, when price comes to them from the top side. So that is exactly what has happened today. What happened was price actually opened gap up, and this particular candle showed green for a while, and then this candle closed like a doji candle. But then can you see this wick on the bottom, on the top? So what does this wick suggest? This wick suggests that after the price opened here, the buyers took the price up to this point here, right? And then it basically closed as a small green candle. So if you see, this candle is green in color. Now that means that these buyers have been pushed, this price has been pushed down by the sellers to this point, and the candle has been compressed here. We do see a wick here, but that wick here does not suggest much. What suggests to us that there is going to be selling is the pressure from the top, and this candle closes as green. Now why did it close as green? It closed as green because in spite of this huge wick on the top, there was immense buying strength also. Now try to understand this fact. See, the buyers pushed the price from here to here, and the PDC was almost close here at this level, almost very close to the PDH, correct? So from here to here, the price shot up. Now there were a lot of traders who have been long in this position and are enjoying good profits over Saturday and Sunday. What are these traders suffering from? They are suffering from greed. These traders are suffering from the emotion of greed because they are in good profits. And there are other traders who have missed this rally, who think that, okay, there has been a rally here on the previous day, now let me go and take a long trade. These traders are suffering from FOMO, who take a long trade on the very first candle. The moment they see, if they are using daily pivots, the moment they see that the candle is taking support at the R2 pivot, they start going long. Now why do they go long here? Because of these emotions. You have to understand the emotions of buyers and sellers. So these traders are suffering from FOMO and they jump into the price right away. The moment the market opens, they are itching to trade, and the moment the market opens, they start buying here, they start buying here, they start buying here, and then the market reverses and actually a candle closes right below the R2 pivot. Now there is panic. Now there is panic here. So this panic here is caused because of the SL orders that are waiting here to be triggered. Tell me something, if somebody goes long here, he buys, right? So what kind of order would he put as SL? It would be a sell order. So this order has to be there if there is an SL placed. So obviously a lot of SL orders are waiting here to be fished out. So when the price opens here, okay, there are two ways. There are two things that can happen. Either a strong green candle can form, and then the price suddenly reverses like this and breaks the low of this candle. In that case, or even in a case like this, when actually the price hasn't been pushed up by big players at all, this buying is retail buying, and this gap up is due to SGX Nifty. I've time and again told you that if SGX Nifty gaps up, it doesn't mean that our market will follow the same sentiment, or if SGX Nifty gaps down, our market will have the same sentiment. It was amply proved here, and I can show you innumerable examples like these where the market sentiment in SGX Nifty is actually negative, but when our markets open, the positive sentiment kicks in and the price takes a massive reversal. And so even here the same thing happens, but here what happens is the gap up is due to SGX Nifty, and all ill-informed and inexperienced retail traders jump into this candle, and there are traders who are itching to go long because of missing this kind of a price action. So they immediately jump into this candle and they get trapped. And so what happens is price reverses. Now what is this red line? This is the supply zone. If you can see here, the price had fallen and we had made the low here that day. I mean the next day, because of SGX Nifty of course, but the price had actually fallen and then recovered, then gone down again and recovered back to this point here. So this was a massive supply zone, correct? So this supply zone here was coming from the 2nd of November. So the price action when it came from above had actually opened above and actually had taken all the SLs of sellers also. So if you can see, these sellers who were coming from this day also got their SLs hit, isn't it? Because some aggressive sellers were sitting here. That is why the massive sell-off in intraday basis also. But then the price action here shows us that when the price opens gap up, what do these sellers do? They will get panicky, right? So what will they do? They will want to actually buy their positions back. So if they put in buy orders, and even these players put in buy orders, so technically the price should rally, but it does not. It does not, and it starts crashing because these sellers from the previous time that I showed you have been successful in pushing the price down. So that is why I said that these are all retailers. Had there been institutions here, the pushing the price down from here then would have been very difficult. And at this point what would have happened is, since this is the selling line of sellers, this is the break even also. This is break even also. So because of the selling here in the first candle itself, a lot of traders, retail traders also would be short on this candle, right? So they would put their SL here, and now price has gapped up and opened above their SL level here. So the moment the price tends to come down, they are initially hopeful that the price will come down, and the moment the price comes down, they are thankful to God and they start thanking God and covering their profits here, or rather I would say their losses here, because they like to get out in break even. So they are tremendously afraid that the price has gone up here and they want to get out. But here what happens is the price tends to hit the break even line here. So they tend to, wherever they would have traded here or here on that day, then they get the advantage of getting out in at break even. So what are these orders? These orders are buy orders, because initially they were sellers, right? On 2nd of November they were sellers because they had sold somewhere here, and their SLs were here. So these were all buy orders, correct? These were all buy orders. But if you get a closing below this line, it means that even those sellers' buy orders were insufficient of pushing or supporting price here. So there was no green candle here. And obviously the moment that the price closes below this, it means that this buying strength was much higher than the selling strength on 2nd of November. And that is why these sellers, the sellers from 2nd of November, could not they would have tried to close their position, but in spite of their closing their positions also, the price was not supported, and you saw that the price closed within the day. And that's why you see some volatility around this area also, given the fact that the R1 pivot was there, but then again the price tended to collapse right down to previous day high. Now let's talk about previous day high. What happens at previous day high? Previous day high has been like here, traders have gone long, right? And since they have been long in this position, previous day high sees some degree of profit booking, because see what happens here is, since price action shows you that it has gone up, now these sellers got their these buyers got their SLs triggered, correct? And once price started coming down, what these buyers did here, there were buyers here who were holding on to positional trades, and people who opened new positions here, they started booking their SLs here. And these buyers, they also got panicky because the price action closed within previous day's range. Now they thought that the price would reverse. So these buyers previously in long positions also started closing their trades. So they started putting sell orders here. And so the price came down to the previous day high here. Now there is again a fight at the previous day high, fight between buyers and sellers. Now again the price shows some sort of a closing within the previous day's range, right? And generally such kind of a fall, when it is triggered by such huge selling from the top, generally it comes and reaches the CPR. So what is essential for you to know here is this kind of price action, this volatility here is because of these buyers trying to buy more so that they can push the price up, and then the price comes down and hits the CPR here at this level. Okay, and after it hits the CPR, it takes support exactly at the bottom CPR, and then at the bottom CPR the price starts to rally again. Now why the rally? I'll tell you why the rally. See, because I'll tell you why it happened. See, what is the time of this candle? This is 10:55 a.m. right? So from 10:55 a.m. everybody who shorted here kind of got their SLs triggered, and that's why these green candles here. But then this buying also fizzled out, and then this red candle was formed. Then this volatility and a candle closed inside again. Now this was a strong candle. What does this strong candle suggest? This strong candle suggests that there is selling, and then again there is volatility around here, and then another strong candle here. Now looking at this strong candle, where were the initial buyers placed? See, this was from where the buying the support came, right? This is the level from where the support came. Why? Because the previous day high was broken, then price, after it broke down with this strong candle, this was the only strong candle. If you can see, can you see any strong candle after these wicks? Only this is the strong candle. So if that is the strong candle, it means that the sellers had placed their SLs here and the price reversed from here. So what is this? This is support. Once price comes down to this level, it is given support. So this is the important candle here, right, which has given support. So if you were to plot that line again, I'll just plot it down again for you. See, now you can see here that this is a candle that closes in, then the price retraces back, then again it shows a red candle with retracement. So the selling is continuous here, correct? And then the price comes down, it takes support at the CPR, and then the price reverses. Now if we were to extend this line forward, can you see this level? I'll just draw a clean drawing here. See, can you see this now? This candle has closed outside this range now. So everybody who went short here is going to get their SLs triggered. That is why the short covering rally here. And this short covering rally, actually I was going to put it on Twitter. I had actually typed the message also, but I did not get the time because I had placed a trade in this short covering rally. Why did I place the trade there? Because if you can see here, this level belongs to 18,100, which is a strong psychological level. I had actually typed the message also. I had actually typed the tweet also saying that be very careful shorting these levels because Nifty has been falling from here, from this point onwards. And the probability of the CPR breaking today is very low because the selling has been coming from here. So whatever happens, if the selling starts here and CPR, as we know, is a very strong support, one of the most important levels on the chart, then buyers are sitting here. And what will these sellers do when they face buying? They will want to book profits here. So these sellers who are sitting here, these will also become buyers, plus fresh buyers at the central pivot range. And then the price reverses. So the moment this candle's high is taken out, we can see that the price just completely kept going forward, and that is why these big green candles that you can see this level being taken out here, right, with this candle. So that is why there was a short covering rally, and I was actually busy placing the trade, and that is the reason why I could not actually tweet at that time that you should not place a short entry here because the price had gone very fast. So I was busy watching OI, and it becomes very difficult whenever there are short covering rallies because they come very suddenly. So it becomes very difficult to actually keep checking OI, plus keep checking the spot chart, and plus keep checking the options chart also, whether it is making good recovery, good candles are made on the chart. So it becomes very difficult to observe so many screens, and that is why I missed tweeting, and I realized only after the towards the very day end, around this area, when the price reached this particular resistance where I closed my trade. Actually it was this particular resistance here, the R2 pivot where I closed. So I was actually checked the tweet at that time whether it had went out, and I realized that I had actually typed the tweet and I never really sent it out. So that is how you should be reading price. I hope you have understood the price action in Nifty as to why this level is important, why this reversal is important, why this particular candle's high being taken out here is important. I hope you understand the price action here. I hope you understand where buyers are, what their behavior is, what their psychology is, and how they place trades. So based on this particular price action, now we will see what levels we need to delete. We will delete this level now since it's been broken from both sides. And one important level that we now find here is the PDL, from where price has actually jumped up. We will see here that from the PDL the price has gone 150 points. It has recovered nearly entirely. So if we go on the daily time frame, let me show you the daily, we see a big long wick doji kind of a candle here. It's actually a doji, but the good part is this particular price action continues. The lower lows are continuous. So as I had told you, the trend line is still very much present. I've actually deleted it because it was interfering with my online chart reading. But this particular line that we had drawn, we can draw it from this place also now. This is the new trend line that price is following now. So if you want, you can keep this trend line going, and definitely this trend line is being followed by price. You can place it like this. So you can see that we are on a definite uptrend. I don't usually keep these trend lines active. I do delete them in the live market because they usually tend to interfere with my chart reading skills, and I don't like anything that interferes with my chart reading skills because I'm a pure price action trader. So I read everything on charts, on naked charts, and trade. So it becomes all the more difficult for me, and also all the more crucial for me to watch price and price alone. So I hope you've understood this kind of this price action analysis, and I hope this has been helpful to you in terms of Nifty. So what you can do here is you can mark this particular demand, this day low as a demand zone, since we have seen a bounce from there, and we don't really see any particular level coming from historical times here. So this is a fresh demand zone that we should mark. Now I will show you what happened in Bank Nifty. Okay, so we will just mark this area in green. That is the low of this candle, and make the color green here. Okay, now we will go to Bank Nifty, and I'll show you the price action here. See, in Bank Nifty actually opened with this long tail pin bar, and it took resistance exactly at the R2 pivot. Now when you have an R2 pivot right in front of price, when the price opens, if it doesn't break it in the first 15 minutes, then the possibility or probability rather of the price trading above that level are low. And anyway, price had opened above these two red levels here. What are these two levels here? This is coming from yesterday's price action, the level of 41,516, and the previous level is coming from 1st of November, where there was a massive fall in price at 41,677. So when price opens above these levels, Bank Nifty had actually opened at the R2 pivot. And when price opens gap up, it does not mean that it has broken these levels. Price has not broken these levels. So anytime you can see a bounce from these levels. Why? Because if sellers are active, so let's say for example you have seen yesterday that price had fallen from here, correct? So if that seller were to be active at this point, then what he would have done is, when price came to this level, then all those sellers plus that one big seller, whoever he is, or a bunch of sellers would have actually closed their positions. And I explained in Nifty that if they close short positions, the positions are long positions, so they will be placing buy orders. And so when they would place buy orders, what they would look to do is they would close their positions here and take the market up from here. But these levels were obviously not very important. They did not they did not prove to be of too much importance, because the selling pressure was tremendous right from the R2 pivot. And as I just said, just understand, most often when price trades below the R2 pivot for 15 minutes or more, then the price breaking that pivot is a little bit difficult, especially when the open is exactly at the R2. I'm not talking about when price opens somewhere here with a red candle and then the red candle high is taken out, because then there would be a lot of sellers in this candle who would be trapped, and their closing would obviously take price higher than the daily pivots. But that is the reason why I keep posting these daily levels. There's daily pivot levels on Telegram in the morning, so that you can plot these. If you're not using TradingView, then you can use Zerodha charts, or whichever broker you're using, you can manually plot those levels on your charts. That is why I post all these levels on the Telegram channel early in the morning. Okay, so now you can see here that Bank Nifty was on a downtrend, right? And from here you can see that Bank Nifty stopped making lower lows. So what should you do during this time? So during such times, what you should do is you should basically mark off this candle's low. So whenever the price is falling, you should mark off the low and you should mark off the high. And now can you see here that there is a particular candle wick here on the bottom? So what you should do is you should keep the high level intact, the range high intact, and you should change this particular, from here you should mark the level here, because you can see here, right, that the price has not really broken out of that range, only a wick has gone down. Now you can see that a very weak tiny candle has broken out of it, and immediately after that candle there is a green candle that actually goes right up to that candle's high. So if this is the candle's high here, it goes right up to it, correct? So you should never trade on such candles. And then what happens is Bank Nifty actually keeps trading. Now I'll actually mark a box there, so you will understand what I'm trying to show here. So Bank Nifty basically kept trading within this range here, and it's a very tight range within which Bank Nifty kept trading. So you can see the wick here. Initially the wick was here, then this candle broke out of that range, but it was a weak candle, so we want to extend the box downward. And now this is the large candle that breaks out of that range. See how long that consolidation went. It went from 1055 to 120. So what is happening here? A lot of orders are being placed here, buy and sell orders, buy and sell orders. So there is equal pressure of buying and selling. See, understand simple things in the market, simple things work. Why is price not going up? Because there might be more selling. Why is price not going down? Because there might be more buying. But why is price going sideways? Because there is equal selling and buying. So you should understand these basic concepts. Market is all about supply demand. So when price doesn't go anywhere, it basically proves that the price is going in a typical range. So if this range is broken to the downside, you can definitely place a trade to the downside. But the problem you'd be facing here at placing the trade to the downside is that at 1:20 p.m. you should see what Nifty is doing. So let's see at 1:20 p.m. what Nifty was doing. This is the 1:20 p.m. candle. Now if you mark this candle from the place where Nifty made a high right down to 1:20 p.m. candle close, Nifty had already fallen 165 points. Now imagine Nifty falling 165 points and then you go short in Bank Nifty. What happens if the high of this range is taken out? Because the market reverses, because the profit booking can come anytime in Nifty now, since it has fallen 165 points, and especially when Nifty is within CPR, there is a very high probability that Nifty will see profit booking. And what if Nifty sees profit booking? What happens to Bank Nifty? This is what happens to Bank Nifty. Bank Nifty also sees massive profit booking to the level where Bank Nifty actually closes above its high, above its open. So this particular price action, when it broke down, had it happened without this fall and had it happened without this fall in Nifty, 160 point fall, then this consolidation would have proven absolutely fatal in Bank Nifty, because this price would have crashed no matter where this consolidation was. It could have been here, it could have been here. But had price opened at this level here, somewhere in this area, and had not crashed this 160 points in Nifty, then this particular breakout would have been successful. But now, see, logic tells you that you should not go short there because Nifty is in CPR as well as profit booking can come anytime. So what should you do in such circumstances? The fact that you should go back to Nifty here in the live market, and I'll tell you how to understand this. See, this is 18,100 level, right? I just told you this is 18,100 level right here. So at the 18,100 level, when 18,100 being a big round number, a psychological number, this here is going to see a lot of support. this area 18,100 is going to see a lot of support. So the price going further down from 18,100 is unlikely, especially after it has fallen 160 points. So what do you do in Bank Nifty now? In Bank Nifty, what you basically do is you basically wait it out and you wait for this candle's range to be broken, this high to be broken. And where was this high broken? It was broken convincingly by this candle. What was the time here? This was 2:30 p.m. So 2:30 p.m. you could have gone long on this candle, taken your profit right up at R2 pivot. And why this is, why you should have that kind of a conviction is because this, because of the size of this candle, of this and these candles here. You can see the size of these candles after Bank Nifty broke down. So if when price wants to go, it goes like this. So if price wants to fall from here, even if you short this candle and you see a consolidation for a while like this, you should know that if you took a breakout trade here in this particular candle, and after this second candle that it formed, it's making consolidation for a long time, you should book your profit somewhere here, that is in break even. So you should change your trade from short to long. You should not stay here. If this level is successfully broken, then the price will fall like there is no tomorrow. Take it from me. Because breakout after consolidation is immensely strong. So price would have fallen down had it not been for Nifty today. Profit booking in Nifty was much stronger than the selling pressure in Bank Nifty today. This consolidation suggests that there is selling pressure obviously to bring Bank Nifty down. But Nifty provided immense support to Bank Nifty, and Bank Nifty's net selling was lesser than Nifty's net buying. So the short covering rally in Bank Nifty also. And then you can see that after this candle closed above this range, this was the top range, right? So above that range, then there was really no looking back in Bank Nifty. Bank Nifty kept going up. So this is the way price jets after there is a successful recovery. And you can see these, after this candle, even here you can see that there is a small consolidation phase. Okay, so these are also tiny candles, these are weak candles. But you don't see any particular strong candles here. After this candle, you had seen this doji here, correct? So after these two candles, you see a doji here. Do you see any sort of weak or a strong selling candle here? You don't see any strong, after this particular candle, you don't see any strong candle within this consolidation. I hope you're getting my point. So after this selling, you saw this doji, which suggested that the price might reverse. But after this buying here, you did not see any doji here, a reverse candle kind of a thing, a reverse, a hanging doji. I don't mean to say doji, I mean to say pin bar, sorry. So this is a green pin bar. You see a green pin bar here, right? So you don't see any red pin bar here. Okay, so that is why you should stick with this trade once you get in. And obviously the fact that 18,100 would act as a strong support is another fact here. Then 18,100 would provide good support to price is the knowledge that you should have, is the experience that you should have. So guys, this is the way I read price action in real market, in actual live market, and you will also learn to read price like that. This is nothing but experience. I've shared many live trading videos with you also, many successful trades. I've shown you the order book, so you know that I trade purely on price, and what makes me read price is just experience, that's all. And now going towards the daily time frame, you can again see that even in Bank Nifty we are seeing this trend here. So this high higher than the previous, this low higher than the previous low, and this low higher than this previous low. So we are seeing good recovery in price, and this is giving a lot of confidence that Bank Nifty might look to trade above the 42,000 level soon. I don't know if it will happen at this particular expiry, but we might be looking at it soon enough, because the selling is being absorbed entirely in every trading session. Can you see this? You can see that this range has been broken today, and the price is actually closed above that range now. So that is a good sign, in spite of it being a red candle, but this particular range has now been broken. So the only resistance left now is this one, which is at 41,840, and after that we will, obviously that is exactly at 42,000. So 42,000 will be the next best psychological level in Bank Nifty now. So we do see a lot of buying coming today, but we will not mark this particular area as a demand zone. Why? Because the thing is that this has happened due to short covering in Nifty. So I'm not sure if Bank Nifty actually has anything to do to contribute to this kind of a rally here. Bank Nifty was dragged up by Nifty today, so we know that we can mark it in Nifty, but that we don't need to mark that particular zone in Bank Nifty as well. So we will see how price action does tomorrow. We want to see also whether we have any other important level today. We have a Virgin CPR coming from today's price action, but that Virgin CPR is extremely narrow, so we don't want to mark that Virgin CPR today. We have this 14,840 immediately above price, but we don't have any other important level to be marked. We have a demand zone down at 40,820, so you should just keep that in mind. Okay, so I don't think we have any other important levels to mark here, guys. This is all that is necessary to be marked. So that will be all for today's price action analysis video. If you've understood it, then do let me know in the comment section below. Also, I might come up with a webinar soon based on how to place trades and understand the market and read the price action along with open interest. So if you're interested in that, also do let me know in the comment section below if you'll be interested in attending the webinar. It will obviously be a paid webinar because I will be putting a lot of effort building it. It's actually my entire system that I will be sharing with you, an important and integral part of my trading career. So do let me know in the comment section below if you all will be interested in that also. And thanks for watching this video. If you've liked it, please hit the like button, subscribe to the channel and hit the bell icon so you'll be notified every time I post a new video. Thank you guys for watching this one. I'll see you in the next one. Bye bye.